And we're live. How y'all doing, everybody? I'm Marlon, here today with Messiah. How you doing today, sir?
Doing well. How are you?
Doing all right, can't complain. And then we have the elder in the building, the Sir Noble, Reggie Middleton. How you doing today, sir?
I am fine. That's the first time someone called me the elder, but that's all right.
Well, you know, I'm glad to be here. Glad to be here in the family affairs to discuss some DeFi and patent technology today. So I appreciate it.
Okay, so go over the quick topics discussion, and I am just tweeting this out to let everybody know, and I'll join you.
All right, yeah. So today, and Carlos, if you can, there we go. So today we're going to discuss some patent comparisons between Reggie's nChain and TRS. And was it True Real Systems? Is their name, Reggie?
True Return Systems.
True Return Systems. So all three have patent families related to blockchain technology. Some similarities, some differences, of course. So yeah, we're just going to dive into some of these topics, look at the differences, and have an AMA. If anybody has any questions, let me make sure I pull up the chat box as well. If I can see any questions coming through.
Okay. So I'm ready.
All right.
So we're going to make this format a little different, where I have two co-hosts, so I'm not trying to do everything, which I mess up, and they came up with, I gave them a bunch of my opinion, some analytics, some research, and some current events, and they came up with a bunch of questions, and we're going to go back and forth between the three of us with the questions and live with the audience. So any questions you have, as long as they're practical and professional, there's no such thing as a dumb question, only a dumb answer, but there is an impolite question, so please be polite. Ask it in the live stream, and one of these two in the live stream chat, and one of these two will hopefully be able to pick it up. And you can also, if you go to the Veritaseum Telegram group, I posted the Zoom login information. You can come on live and ask the question live via audio or video. It's your choice. You have to go through a waiting room, and you have to go through Telegram so we know who you are, okay? And let's get started. First of all, I should pack a lot of stuff in here. Number one, we discussed the patenting of Bitcoin. Yes, it looks like it actually can happen, and at least one of the guys who said they patented it, he had the right to patent it. We also are going over concentrations of power in these decentralized or unconcentrated markets. And there's really no such thing as truly decentralized. Because there were, where are all these billionaires coming from? Okay. And a bunch of other things. So who wants to start off? All of Marlon or Messiah? Let's pick one.
I want to interject with the family. Messiah, you can start off.
All right. So the first question I prepared for you was, how could the patent holders enforce their patents against decentralized platforms and entities such as Bitcoin, where there's no clear sole owner?
Okay. So as I said right before you asked that question, there's nothing that's truly decentralized. You have centralized here, decentralized there, and everything falls on that spectrum. The so-called decentralized entities, let's name a few. Let's suppose the Reggie Middleton patent covers Bitcoin. Okay, and so Bitcoin, or the use of Bitcoin, falls under my protected patented IP. Coinbase uses Bitcoin. Would I really have a problem serving Coinbase? I know exactly where they are: physical address, CEO, CFO, general counsel, etc. Let's take a decentralized project such as Uniswap or CompoundDAO. I've given you all some information that hopefully you'll share later on. True Return Systems has a patent covering the use of centralized data sources and oracles in decentralized systems, of which almost all the liquidity pool projects are allegedly infringing, and they're looking to serve those. You could serve them using federal case law through Twitter and social media. And those DAOs, if they're truly decentralized, will not answer. If you don't answer, well, then you lose by default, summary judgment. If you do answer, then you're not decentralized. How could a decentralized entity respond? So if you don't respond, the petitioner gets a summary judgment, and then they could take that summary judgment and do something very special and scary with it. DAOs, the decentralized autonomous organizations, are how a lot of these funding vehicles are and governance vehicles are constructed. The common ideology among the legal the legal smart guys is that they will be treated as general partnerships. So the members would be either general partners or limited partners. General partnerships have joint and several liability, which we went through in a couple of videos before, meaning that everybody in that partnership or everybody in that DAO are jointly responsible for that judgment that the petitioner would get, but they're also severally liable. So each and every one is liable for the full infringement liability, as well as being liable together. So going through somebody like CompoundDAO, they have very large, sophisticated investors. I'm going off the top of my head. So large VC funds such as A16Z, put together by Andreessen Horowitz, Uniswap Ventures, Coinbase Ventures, Bain Capital, et cetera. These are pretty significant guys. Mitt Romney, if I'm not mistaken, very well involved, very deeply involved in Bain Capital. Uniswap Ventures, one of the most prominent venture capital firms in the country, et cetera, et cetera, et cetera. For the younger people, A16Z, which was formed by Andreessen Horowitz, Mark Andreessen was the guy who helped code the first commercial browser, the Netscape browser. So, they know what they're doing. They're not hard to find or serve at all. As a matter of fact, they advertise it. That's how we know about it. I'm pretty sure that's how the petitioner knew about it. So the concept of decentralization is much more myth than fact. Now, as for Bitcoin, you ask how would they serve or extract, capital out of Bitcoin. I don't think anybody has the intent of going after Bitcoin. Bitcoin is a technology like the internet. So if you had, using the internet as a more common example, if you had a patent that gave you IP rights over the internet, you wouldn't try and sue the internet, but you would sue somebody who used the internet infringing your patent without your permission. So you go after Amazon or Google or eBay. You wouldn't go after the internet. You wouldn't go after Marlon or Messiah. Everybody wants to go after me, but they shouldn't. But you understand what I mean, right?
Right.
So hopefully I answered that in detail.
So, in regards to Bitcoin, compared to Ethereum, most projects and protocols are built off of Ethereum, and now we're starting to see other solutions introduced on top of Bitcoin. One being an example, Stacks. It's technically not a layer 2; it's a layer 1 that, in conjunction with the Bitcoin chain, uses proof of transfer as the consensus mechanism. Would a project like that match with what your patent matches in terms of what you're looking at with some of these Ethereum protocols and layer 2s?
I haven't reviewed it. I'm not familiar with it, but as you described it, it sounds like it. There's a strong possibility it could trip at least one or two of the claims. At least, remember the patent is for the conditional transfer of value, right, through a distributed ledger using asymmetric key pairs. So if you have a private key, public key, if you're going through a ledger, or contingent upon a data source. So it's contingent. So sending it from layer 1 to layer 2, it's not going to infringe, or sending it from Bitcoin user A to Bitcoin using B wouldn't infringe or trip the patents. But if you sent it from Bitcoin user A or blockchain A to blockchain B, okay, and the blockchain uses asymmetric key pairs contingent upon a data source, you need a data source because you have to identify who you're sending it to, why you're sending it, what it is, the price, etc., time, it could be any piece of data, then there's a strong possibility, in my opinion, which is uneducated. I'm not a lawyer. I'm not a technologist. I'm not a smart guy. I'm just a dad. And if anybody doesn't know, that's my son on the bottom, by the way, Messiah. So, okay. So my uneducated guess, not knowing anything about stats, it's my caveat, means it's a possibility. Okay.
Okay. Appreciate that. Looking in the comments, it looks like we have one question so far from Tim Goodson. Reggie, what do you think about billion-dollar market cap cryptos like Filecoin or Solana with respect to the remaining token supplies? I feel that contributes to the centralization problem via token inflation.
I'm not a big believer. And by the way, there's someone waiting in the waiting room, quantum crypto consultants. But I'm not a big believer in tokenomics, how it's applied, because it looks as if a lot of people looked up a couple of Wikipedia terms, Investopedia terms, and tried to apply them, haphazardly. So token supply is really irrelevant, even if you're going through the demand supply methodology, because it's really a function of demand and functionality. It doesn't matter what your supply is. You give a supply of 2 tokens. If nobody wants it, the supply is simply excess. You could have 500 billion tokens, and if the demand is extreme and utility is there, then you have potentially undersupply. Okay, and I don't look at these projects in terms of supply of tokens, price of tokens, etc. I look at it purely from a functionality perspective and the applicability of the functionality purely. So, and I also don't look much at those projects. We did go over Solana with a fine-tooth comb, but that's for infringement analysis and not for, into anything in terms of investment. So hopefully I answered that question. If not, you could come back and ask another one, whoever that was in the chat room. By the way, everybody, please hit like on YouTube and then hit share it to all your social media friends. Okay, and subscribe and hit the little bell if you haven't, because I'm going to start doing this regularly, possibly weekly. And if you haven't noticed, I give analysis, information, knowledge that is just not available on the internet, particularly from the big companies such as CoinDesk and Coin Telegraph. One reason why you will never get it from CoinDesk and Coin Telegraph is because they're part of the centralization of power. They are both owned by Digital Currency Group, Barry Silber. Both the number 1 and number 2 news outlets are owned by the same group. They're used, in my opinion, much more for public relations and actual news analysis. Just a quick lesson. They're compensated via stock appreciation rights, which are a derivative of a DCG Group's equity. That's how the editors and the reporters are compensated. So if your compensation, the amount of money you bring home, is based upon the equity performance of your parent company, and your parent company does absolutely nothing besides invest in other cryptos, then you're conflicted, particularly if you come across a tall, handsome gentleman who happens to have what he claims to be a foundational tech patent that covers most of the industry. Now, if I made such bold claims and they were not true, I would think these entities would come and attempt to rip me a new hole. He's a fraud. And they've been on the front cover calling me fraud before. He's this, he's that. You haven't heard peep. That whispers with thunderous effect. Okay.
You heard about the Craig Wright, the news a couple months back. That was definitely in the news.
He is in the news, and not much positive. Okay. The reason why you don't see a lot of positive interaction between Cointelegraph and CoinDesk and Craig Wright is because take a look at DCG Group's portfolio, and then take a look at Craig Wright's patent.
Can I bring up this one image, the connection between some of these entities?
Go ahead. If you look at Craig Wright's IP portfolio, and that includes copyrights of the Bitcoin whitepaper in the UK, which is very powerful, and it also includes several patents, 53 actually. You see where there's a significant conflicts of interest, which is why you don't see that many positive articles about Craig Wright. Now, let's get something straight. I don't know Craig Wright. I don't like him or dislike him. I don't care if he's Satoshi Nakamoto or not. Whether he is or he's not puts no more or less money in my pocket and does nothing for my life. So unlike most people in these crypto discussions, I don't have a negative or positive view of him. I look at the facts. The facts are he has probably over 1,300 patent applications. So he said, I haven't checked them. He has 53 issued patents. 2 or 3 of those patents have meat on them. The balance of those, from my opinion, are more minutiae and fluff. But 2 or 3 have real meat. Okay? That should say something. Now, this diagram is from roughly 2018. And so it's dated, where it says there are, 50 investments somewhere? DCG Group actually has about 200 to 300
Oh, it says
actual.
the epicenter of the Bitcoin and blockchain industry owns 81 companies.
Okay, so multiply that by 3 for 2022, and it would have more than 200 or 200 and change, except for there were liquidity events. For instance, Coinbase were invested in, and that's one of the big ones. Coinbase went public. Okay, but Digital Currency Group, owned by Barry Silber. Barry Silber has an interesting history. He's at Goldman Sachs. He found out that their illiquid assets were selling for significantly less than that in fundamental intrinsic value because of lack of liquidity. He created a trading desk after quitting, raising some capital, quitting Goldman Sachs, that traded illiquid assets. They were municipal bond derivatives initially. That didn't trade. I forgot the name of them, but this was during the 2008 market crash. And shortly thereafter, Bitcoin. And he sold that to NASDAQ. It's called second market for undisclosed amount. I would think about 200 or 300 million. Just taking a guess. He wasn't the full owner of it, but I think he was a significant owner. And then he started Grayscale and Genesis Trading, and then started Digital Currency Group by raising capital from a lot of these big banks here. Okay, so now you see where HSB, NASDAQ, MasterCard have ownership directly in Digital Currency Group, and Digital Currency Group has ownership in about well over 200 startups, and still has public ownership if they didn't sell the stock off of many companies that had a liquidity event, such as Coinbase. He's invested in Coinbase, in Kraken, likely in Binance, but I'm not sure. It's been said that Digital Currency Group controls 40% of Bitcoin volume. Okay. Now, if you take a look at my US and Japanese patents that have been granted, and you take a look at these big banks who've invested into Digital Currency Group, you would see MasterCard had the site several times. NASDAQ had the site. Wells Fargo had the site multiple times. HSBC, I am not sure. Coinbase had the site. Kraken is on the radar. So a lot of these entities actually had to cite our patent. And most of these entities, in my opinion, are touched by the IP that we have.
Now,
So
does DCG not have any patents themselves, or how does that work with them owning some of these? I mean, like you say, if any of the companies infringe on the patent, then DCG themselves would be held liable too, or no?
Well, that's a legal question. Okay, so what I'm going to do is I'm going to give the same disclaimer. I'm not a lawyer. I could give my feeble understanding, but an investor in an infringing company, if I'm not mistaken, and I very well could be considered a contributory or contributing infringer because it contributes to the infringement. So it's a possibility that this runs down the line.
That's a long line too.
It's actually much, much longer than what looks like there. And realize I'm not the only one with patent over technology. I just feel, probably because it's me, that I have a foundational technology patent. But I'm sure it's going to come up a little later. nChain, of which Dr. Craig Wright is, I think, the lead scientist, has quite a few patents, and he purports to be Satoshi Nakamoto. I don't want to get in that discussion. Again, I personally don't care. I don't see why everybody else does, but that's neither here or there. But whether he is or not, he won the copyright to the Bitcoin whitepaper in the UK, one of the world's largest economies and the second largest financial center in the world, second only to the Wall Street in the US. And he also has several patents. One patent looks very, very much like it is patented Bitcoin. So if you don't believe what he says, take a look at it where it stands legally. Okay. Ignoring that is why you're going to see a significant shock over the next year, in my opinion. I have a strong belief he's going to start enforcing his IP. And I believe his goal is not to shut everybody down, but to shut everybody down who uses the Bitcoin name or infringes on those patents if they don't go through his chain, which is BSV, Bitcoin Satoshi Vision. I believe that he's going to have the chain, he's going to embed the IP licenses into the chain. So if you use Bitcoin SV, you have no problem. If you don't use Bitcoin SV, either you have to pay a fee or he has the right to exclude, at least in the US. This is all guesswork, okay? This is me using my strategic mind as to what I think he'd do. I don't know the guy. I haven't spoken to the guy, so I have no idea if that's the case or not. But I'm not a fool, though, so I could be right. Okay, what's on the screen now is, yeah, what's on the screen now is a compilation that our analyst did at Veritaseum, gathering patents that have a significant, what we think may have a significant reach. This is just a compilation of abstract specifications and claims. And we're going to look into it further throughout the next few days and into next week. But at first glance, that virtual currency system patent, which is from nChain, which is granted, looks like it's Bitcoin.
Yeah,
at first glance.
Yeah, from reading over it and some of the claims after this, it's, nodes interacting with each other to transfer a currency. It's, plain as day what people in layman's terms say about Bitcoin.
Mm-hmm. The danger is it's not a layman's game, but it is what it is, and if it says it rather plainly. So it takes time to go over this, but if it looks like a duck and quacks like a duck, it might not be a platypus, right?
So how do you differentiate between your patent and this patent?
That patent, from what I've read, it was 3 o'clock in the morning, and I only put about 30 minutes into it. But that patent covers the transfer of value using nodes in a ring topology, where you have a node, like a server, and it's covered on each side by another server, and it passes value through, very Bitcoin-like. Basically, it describes Bitcoin, from my understanding, rather accurately. Our patent covers a conditional transfer of value. Okay, so if you transfer value conditioned upon X, Y, Z, then it's covered. So the difference between regular passing of value is sending one ETH or one BTC from wallet A to wallet B. Conditional value would be sending one ETH or one Bitcoin from A to B, contingent upon the price of fiat currency, like a dollar or stable coin, the price of gold, a stock, a time, another address, like the Lightning Network. The data is unlimited, so there's no limit to it. So basically, once you do an actual financial transaction other than A to B, that's when our patent comes into play. This patent may be broad. I don't know if it covers DLTs in general, but it seems to be aimed towards blockchains, focus on Bitcoin and Bitcoin-like structures. Our patent covers, in my opinion, any permutation of a financial instrument or transaction of value, because it's not limited to financial, that one can think of, that we can think of, and try very hard to be considerate of future events when drafting a patent.
Now, you had mentioned from Craig's Wright patent that he's sent out litigation in terms of to not use the term Bitcoin. Is that accurate?
That wasn't a patent. That was copyright. In the UK, the laws in the UK are a little bit different from the laws in the US, and there's a consumer fraud protection law where you're not allowed to use a term that you're not allowed to use a term of a product that you don't own. or have the rights to. So he's suing Kraken and Coinbase, trying to get them not to use the term Bitcoin to cover BTC or BCH, Bitcoin Core or Bitcoin Cash, which is interesting because he purports to be Satoshi Nakamoto and have created Bitcoin and to own Bitcoin. And a lot of people say he's a fraud, et cetera, et cetera. Again, I don't really care, but the issue is UK courts don't agree. And once the courts agree to something, that's pretty much the way it is. That's just the UK, but he could be using that as a starter. I'm just sitting back as an observer, not taking sides, but I listen and learn. And I think the industry would be very, very well served to read primary sources, such as actual patent applications and legal documents, and not take all the information from CoinDesk, Coin Telegraph, et cetera. One reason would be that CoinDesk or Coin Telegraph are all owned by the same guys, and they're owned by the guys who happen to be suing Craig Wright. Remember, who owns Coin Telegraph and CoinDesk? Okay, so they're suing Craig Wright because Craig Wright is suing their biggest investments, Coinbase, Kraken, et cetera. Now, I can tell you right now, since we're on the topic of exchanges like Coinbase and Kraken, they have been collecting rents from their users, okay, that they don't deserve and that they don't own. This is my opinion. I believe that our patent thoroughly covers Ethereum, okay, multiple ways, okay. I just showed you that it's quite possible that an nChain patent covers Bitcoin. It's also quite possible that our patent covers Bitcoin. I never delved into it because Bitcoin has an outsized mind share in terms of popularity, but actual economic activity, Bitcoin pales in significantly. It's traded back and forth a lot as an investment, but in actual use, Ethereum is the way to go, okay? But as an academic exercise and for another reason, which I'm not going to mention, I've had my guys look into Bitcoin, and thus far they said, it looks like it does, but there's still a lot of work to do. Now, if these exchanges, and there's a bunch of other projects as well, from on-demand liquidity and RippleNet to Solana to Axie Infinity to Compound, you can run down the list. These things are traded on these exchanges. They're extracting rents, getting revenues and profits, and they don't own the IP to it. Coinbase has dropped 75% since its IPO. That's a ridiculously bad drop, okay? We did a full forensic analysis of Coinbase. The model and the report took me about 4 man-months to do. I told everybody go back to the model and do it over because we're modeling multiple patents into it, and not just our patent family, but multiple patents from other patent families. And I am fairly confident the report's not done yet, calculations not done yet, so this is just speculation. But from where I stand, Coinbase is a short right now after a 75% drop. All their revenues come from trading cryptos or services around cryptos, and they're using technology that they don't have the IP rights to use. This is speculation. I have no idea if they made a deal with nChain. I have no idea if they made a deal with True Return Systems. I do have an idea if they made a deal with me, but I'm not going to discuss that, but you can guess, right? And this is not just Coinbase. These are all exchanges, Kraken and Binance, et cetera. It's interesting because the analysts, especially the Wall Street analysts, it's their job to know this. All this stuff is public. Patents are hard to read, especially crypto patents, hard to understand the law, but it's irrelevant. That's why they pay you $3 million a year, okay? And that's why you have a staff of 20. I can say with confidence from a fundamental perspective, you're going to see economic revenues drop, economic profits drop. And if you're going to do a discounted cash flow analysis or comparable analysis off of economic profits and revenues, down the price should go. Now, I don't do trading, I don't do technical stuff, but I'm strong on fundamentals. Look at my track record, very, very strong.
I was actually going to ask you about that, based off of some of looking at the DCG kind of ecosystem map, NASDAQ being a part owner of DCG and DCG being a part owner of Coinbase and Kraken and Bitcoin, these exchanges owning 40% of Bitcoin transfers. how does that correlate to what we see in the traditional market, almost with the price of Bitcoin moving the same way as the NASDAQ? Just from my perspective, it's been interesting kind of to watch. And, you hear the community say, oh, well, Bitcoin's a hedge against inflation, or, when we saw the price drop down in the regular markets, some people expected to see an uptick in Bitcoin, but we've seen, the price of Bitcoin, we've seen it kind of correlate together. So I just wonder, after looking at the DCG stuff and everything, what's the correlation between that? Not a question to you, just kind of my thoughts on that, of our discussion.
I'll throw my 2-bit in, and let's hear from the side as well. Let me throw my 2-bit in. Number one, I don't know Craig Wright. I don't like him or dislike him, but I do agree with him in that Bitcoin has lost its way. It is not peer-to-peer internet cash anymore. It's not. It's a speculative investment, period. The Lightning Network came up. It has some functionality added to it, but if I'm mistaken, that was supposed to be the functionality of Bitcoin core to begin with. That's what it was launched. That's what the white paper says. That's what the original code said. But that's also not my fight to have. But as for how it correlates to the traditional markets, I'm going to pose a hypothetical. Let's take DCG and Binance as an example. Imagine if JP Morgan controlled 40% of all equity trades in the world. 40%. Imagine if JP Morgan owned the first and the second largest media concerns.
They can control the narrative.
Right? Imagine, right, if JP Morgan was the largest investor of all startups and all banking and finance companies worldwide. Now, we all know JP Morgan doesn't come close to that level of concentration. Bitcoin does. So Bitcoin, digital markets, decentralized, I don't know. They are much, much more concentrated and centralized than Wall Street. And Wall Street is the biggest, greediest industry in the world. So think about it. And that's just using DCG. If you take a look at the trading volumes of exchanges, and Coinbase is the biggest in the US, I think they were doing, I forget how much, like $4 billion of trades a day. I can't remember. But that number, CZ, the CEO of Binance, his net worth is more than a market capitalization of Coinbase and Kraken. And Kraken is private, of Coinbase and NASDAQ OMS, NASDAQ markets in the US, plus another $20 billion. That's his personal net worth. We're not talking about Binance. We're talking about the CEO of Binance. That goes to show you how big Binance is compared to the local US exchanges, because Binance is truly global. And regulators have been chasing Binance, but it looks like they're getting, buddy again. So these are examples of the concentration. Listen, props goes up to CZ. I really love what he's done. He's a true entrepreneur. Not only do I not have anything against him, I'm actually quite appreciative and quite, what's the word I'm looking for? I do appreciate what he's done, and I have a lot of respect. But, I'm taking a look at his success, and I'm marking his success to market. DCG and Barry Silber, they don't give me money, right? They seem to put only negative things in their article, in their media, but neither here or there. I don't take it personally. I understand the game that they're playing, but I'm just marking their concentration of market, and I'm comparing concentrations in so-called decentralized industries to obviously known decentralized industries traditionally. And the crypto market is so much more centralized than traditional financial markets. It's almost incalculable if you divide it and use zeros. Well, it's calculable, but let's say it's about 3 or 4 or 5 times as centralized. Okay. Right. Masai, let's hear from you, because you're not more do all the talking. So
okay. So I guess continuing on with the centralization theme, what would you, or do you think the centralization of power in the crypto space will go up or down with you and potential other patent holders having patents that cover such large portions of the crypto industry?
I can tell you strong belief looking at the holders of the more powerful patents, none of them are large companies. They're all entrepreneurs. You know, nChain, Craig Wright, whichever, because nChain is a combination of Craig Wright and the guy from Australia, the billionaire investor who seems to be backing him. True Return Systems is a guy from locally tri-state area, New York, New Jersey, Connecticut, entrepreneur, okay, and more. Just dad, the poor dad. So these are not, decimal and $1 billion and $1 trillion companies, okay? And the reason why they don't have those, what I consider foundational tech patents, is most likely culture, okay? They don't have the real entrepreneurial culture at that size. It's very difficult to have an entrepreneurial culture and to be, a $1 trillion or $3 or $8 trillion company. It's just very difficult, number one. And the original cypherpunks that came into this industry in 2008, 2009, 2010, they, in my opinion, not foolishly, that's a negative connotation, imprudently eschewed IP and IP protection. And that doesn't mean it goes away. That just means someone else is going to get it. And then when actual businessmen came in, okay, or finance guys came in, they realized that IP protection is tenant doing business, just like having an email address and a telephone number. If you have an idea and it has value, if you don't protect it, then someone else has the idea and you no longer have access to it, okay? So that's my theory. And if entrepreneurs are able to hold on to power in their own inventions, that is going to flatten the power curve out significantly. If we have the Cocas of the world with their Metas and the Facebooks and the Squares and all big, multi-billion dollar, $1 billion, trillion dollar companies. Well, what do you think happens when a $1 trillion company gets more power? Gets concentrated versus a bunch of entrepreneurs. I don't need to have $10 trillion on a balance sheet and control the world. I also have no desire to do it. I have a strong feeling that I'm not the only one. My desire is to make true peer-to-peer capital markets. That's my answer for that question. Okay, anything in the YouTube?
Yeah,
chat?
we got a few questions. We can go through them. From Make YouTube Great Again, what would make Reggie litigate? And if so, what would the strategy be? Japan, question mark?
It will make me litigate if someone is using my invention that I've fought 7 years to get a patent on, and years before that, and wrestled with regulators who accuse me of doing things that I may have disagreed with, and on, and lived through poverty and sacrificed my business where my children had to sacrifice for decades on end. And I had to go through all that. And I finally got my property, and then someone uses it to make money at my expense and refuse to do business with me. Then that would make me litigate. Okay. The strategy is something, unfortunately, because it's a strategy, it has to remain private. I can't really give my strategy out. When you tell everybody a secret on social media and YouTube, it's no longer a secret now, is it?
Right.
But Japan does come into play because Japan has a much, much shorter litigation cycle in IP and patent litigation than the US. The average patent dispute in Japan is 8 months. If you go, the short side is 4 months and the long side is 12 months. What does that mean? That means it doesn't matter how much money you have, you're not going to have an extended discovery period and drain the plaintiff of money back and forth for 4, 5, 8, 10 years on end. You have a matter of months. So if you really don't think that you can win, or if you really believe that you are not innocent or are not infringing, then you should make a deal with the patent holder. Because if you don't, the judge and jury will. That's, again, I'm not a lawyer on Japanese IP, but I have been studying, paying attention. The US, which is a larger market, but realize Japan is far from tiny. Japan is the third largest economy in the entire world. And it's probably bigger than the third largest crypto market going forward, because Japan actually made clear laws that they wrote down and didn't leave bear traps for entrepreneurs who had to guess and didn't guess correctly or weren't part of the club. like I'm not, okay? And hopefully the David versus Goliath, capitalism story works. You know, I'm not part of the club. I'm not invited to the club meetings, but I have the deed to the clubhouse.
That's the most important thing. You got the keys. Well, and currently there's no like any current court proceedings or trials going on for any crypto IP infringements that you know of right now, are there?
There's a few. I've sent out notices, but I'm not going to name any right now because, you know, it's not about picking fights. And the entities I sent notices out to did exactly what I thought they would do. My opinion, it's foolish, in my opinion, but, you know, they're multi-trillion and multi-billion-dollar companies, so I assume they believe they know what they're doing. I have no desire to fight or litigate, can't stand court. I know a lot of lawyers, but, you know, I love you guys, but, you know, it's not my favorite, you know, profession. But again, I don't think it's fair to use someone else's property without their permission and to benefit from it. So just so you know, a legal tidbit, if you put on notice of the existence of a patent that you may be infringing on, and you continue to infringe on it without getting it all clear, whether it's false or positive, that you're not infringing, you've started the clock on punitive damages. Punitive damages means the law was designed to punish those who willfully infringe on a patent. And so the difference between punitive damages and compensatory, another disclaimer, I am not a lawyer. I'm just a dad. I'm not even a smart guy. I'm just going through what I understand the laws to be, okay? Personal opinion, obviously not advice. So a compensatory damage is, let's suppose I go to a super big bank, and that super big bank is, say, JP Morgan, and they've been doing swaps, et cetera, through the blockchain, infringing on the patent for 2 years. I find that they pay me 2 years worth of licensing fees and royalties, plus my legal fees, okay? If they knew they're infringing for those 2 years and decided to keep doing it, well, now they have to pay me those 2 years of licensing fees, let's say $200 million, but they also now have to pay a punitive fee, and that's the court's way of saying you tried to use your muscle, right, to basically force your way in and use this guy's technology without his permission. So we're going to make it not worth your while and inconvenient to do that. So the court has the power to award up to treble damages, treble meaning 3. So now instead of $200 million they have to pay up to $600 million. That $600 million nut hurts. After that, you still have to pay ongoing for the use of the patent. If I decide to allow you to use the patent, it's also under some areas, I can exclude someone from using that patent in that industry. So I can use it, not the patent, the technology. So patent law is a very esoteric, very difficult specialty in the legal practice. Crypto is even newer and more specialized. So crypto patent law is like a frontal lobe brain surgeon who works only on Uranians who happen to be from Pluto. So you see how very specific it is. Okay, and this is True Return Systems website, and I
was going to bring up that claim, but now it's asking for a password. It's crazy because it wasn't doing that yesterday when I was reading over the stuff.
Don't go to CDocs.
Yeah, I did, and now it's asking for a password.
Okay,
weird.
Go back.
We didn't do that yesterday.
Yeah, that might mean that they have made some progress. What's on XDocs?
Same thing.
Okay.
It might be on.
I might have downloaded it. Say it again.
It might be on to us.
He made it public, so, and I have no beef with him whatsoever. I may be able to send it to you. So take another question in the meantime.
Yes. Let me start sharing my screen. Let's see. From Baraborn, Estonia supposedly used a blockchain-like system to create their digital government platform. Is there a possibility for digital citizenship through crypto? It's a little different.
I'm sure there is. There has to be thought through. Technically, there is, but it's not the technicals that catch you, it's the details and the nuances. Usually apply nuances and legal nuances. So I'm sure the technology is capable of doing it, but that's something you have to think through. Okay, I sent you the 3 documents. You could check, Marlon. You could post them from there.
All right, checking right now.
In the meantime, Messiah, any other questions from you or the audience?
I don't think we're going to see the audience's questions, but
if you go to the website and go to the actually YouTube video on the website, and then go to the chat box, you see there's a live chat discussion. Or you can give me your question, whichever is easier.
I was going to ask, as an investor in the crypto space, as an investor in the crypto space, how would you, if you were an investor in the crypto space, how would you navigate knowing that there's a lot of potential investments infringing on or potentially infringing on patents?
I would do what everybody should have did in the first place, and what I try to always do, and what, interestingly enough, a lot of these big venture capitalists always do due diligence. You think about it. A lot of these VC firms, I'm not knocking the VC firms. I literally just don't understand why they're doing it. Maybe I'm missing something. I actually spoke to the founder of one of the most prominent VC firms in the country. And again, I'm not going to name him because it's not about who it is. It's basically about what they're doing. But he's very prominent, very well known. And he and a bunch of his co-investors have piled into these DAOs. The documents that I sent Marlon and I sent you earlier, is one of the DAOs. It's CompoundDAO, MakerDAO, etc. And what they do is they put capital in, 10, 15, 25 million each, I suppose, 5 million each. They put the capital into the DAO, purchases governance tokens from the DAO, and then the money goes in to fund the project, such as Compound Finance. They use the governance tokens to vote on the operations of the entity, and they expect a positive return from the compound tokens, governance tokens, my assumption is. And they expect to be able to guide the operations of the project. So what does that sound like? When you put money in, right, you get voting rights and you get the potential for gain, capital gain. What does that sound like to you?
Sounds like they're a shareholder.
It really sounds like it, right? No equity participation, but a lot of components of equity, voting, capital gains, a lot of proponents of it. So, but again, as everybody knows, I am not a proponent of SEC enforcement. I've had very, very bad experience with them. I think they've gone way off the plantation. But that does sound like a duck and quack like a duck. So I don't know if it's a platypus. But more importantly is they went through this DAO. And remember, when I explained how the DAOs are likely to be considered unincorporated business entity or business partnership, that means that all these VC firms are jointly and severally liable for patent infringement. And Compound does a lot of money. I think Coin Telegraph did an article that they've done $1 trillion worth of trading volume since inception.
That was Uniswap. You said Compound?
Uniswap. I'm sorry, that was Uniswap. Okay, but I believe, if I'm not mistaken, Uniswap has a DAO. Okay, but it's irrelevant whether they have a DAO or not, because the entire liquidity pool paradigm, in my opinion, touches our patent, or our patent touches that heavily. Okay, so the investors in these things, did they bother to go through the patents to see if anybody, to see if Uniswap or Compound own the IP that they're selling or using? That's the question. If they were to invest into a semiconductor fabrication, a semiconductor fab, or a pharmaceutical company, or a biopharma company, would they kick the tires on that tech and see if they actually own the IP to it? Of course they would. So why would they go to this tech and ignore an IP search? That boggles my mind. It really does. I just don't understand it. But they are potentially liable, and I don't think there's much they could do about it because the entities that they invested in theoretically can't even respond. To show how, and I've been through this before several times, I'll go through it again, to do the story of Uniswap. I did an ICO in 2017, and in that year, another company out of Israel called Bancor did an ICO with a pricing algorithm that they got from a professor that basically did liquidity pool pricing style and bouncing using supply and demand to create a price to give permanent liquidity or constant liquidity. That idea was thought of to be interesting, and it was forked through GitHub by the guy from Brooklyn who created Uniswap. Uniswaps became very well known, did very strong business. Now it's done over $1 trillion worth of volume. But Uniswap was forked by this guy called Nomi Chef, and he took the code for free and created SushiSwap and drained over 50% of the volume out of Uniswap. So somebody said SushiSwap did a good job. And so these guys from Binance came over, or at least the Binance Smart Chain that used it, and they forked SushiSwap and created PancakeSwap, which brought that liquidity and used the liquidity of Binance Chain through the liquidity pool swap. So the Veritaseum Reggie Middleton idea went through Bancor to Uniswap to SushiSwap to PancakeSwap. So you see how this patented IP wiggles its way through because everybody forks. Nobody does IP due diligence. I'm going through these patents, and I'm paying a lot of people to go through patents. And I'm finding things that apparently a lot of people don't find. Our patent is very pervasive and very powerful. Craig Wright, what everybody calls a fraud. Have you read the virtual currency patent? Because if you read it and it doesn't bring to mind Bitcoin, then either I have no idea what I'm doing or the people reading it don't know what they're doing. So I'm not saying it covers Bitcoin because I didn't put enough time into it, but it definitely does come close enough to raise a question. It's worth reading for more than a few minutes, especially if you're concerned about Bitcoin. Definitely. So that's a long way to answer your question, Messiah. So next up, anybody, free for all, and out of the, let's get questions out of the live chat as well. And
yeah, before we move to the questions, do you see the complaint letter I have up? From
it says Compound Protocol currently has.
Oh, I'm sharing the wrong screen. Well, yeah, I was bringing up the Compound as well. Hold on. Let me share this one. Let me know when you can see it.
Okay, I see it.
So here's the complaint letter from True Return System. Sorry, and it was back on March 10th.
So, just so you know, I don't think that's a complaint letter. I think that is either notice of potential infringement or cease and desist, one of the two.
Yeah, okay. I thought that's what they said on the website. But yeah, they mentioned directly the patent number and the claims that you had on your Veritaseum research for the claims as well. And I think was real interesting is the explanation of the liability of the DAO and its members in the letter.
Yes. It is very interesting. Let me just explain the difference between these. So a notice of the infringement, okay, is when you contact somebody and you tap them on the shoulder and say, hey guys, we have this patent, it covers X, Y, and Z, and we think that you guys may be infringing on our patent. So that's a notice. You're giving notice to let them know that you think they're doing X, Y, and Z. A cease and desist letter is that, and a request that they cease, stop using it, and desist. A little more strongly worded, but it serves as notice as well, of course. This letter goes through and explains very interesting things, such as I believe it's A16Z, which is one of the sub funds of Andreessen Horowitz, one of the most prominent tech VCs in the country. And their legal counsel came up with the same finding that I did, that it's quite possible that DAOs can be considered unincorporated businesses and or general partnerships. I'm going from memory. I'm paraphrasing, but you can look at the actual.
Here's the notes right here from the A16. Significant legal precedent exists for U.S. courts utilizing a functional approach to determining whether a partnership was formed, irrespective of disclaimers and specific intent to not form a partnership. The operational structure of a DAO provides certain advantages against liability, as a smart contract prevents much of the legal risk of a typical organization. However, if a judgment were to be entered, accessing DAO resources would require a vote of the widely dispersed and pseudonymous members, which could be unwillingly to utilize treasury assets to satisfy any judgment, increasing the risk that such liability falls on individual DAO members.
Read the next line. This comes from the actual author.
Here we go. To paraphrase, if it looks like a general partnership and acts like a general partnership, courts are likely to treat it as a general partnership. That sounds like your duck line right there.
Now, this is the issue. This came from the lawyers of the venture capital fund that invested in Compound. How do you defend against that? When your lawyer told you, and it's public.
That's a conundrum.
You can't say you didn't know, right? So, they have some issues, and that's not the only patent that they possibly infringe upon. Let's put it that way. We have a full 70 page compound report for our own internal uses. And it's very detailed. So
see some of these comments a little more.
Yeah. I was gonna say, I see a comment here that I think is interesting. Someone asked, can governments call the coins in dispute systematically important, and could that negate potential IP claims?
Okay. I can only speak for the US because I'm only familiar with the US laws. And again, I'm not a lawyer. So they can't negate patent claims, but they can compel licensing. It's called compulsory licensing. So if your technology is pertinent to US security or US citizens' health and well-being, let's take the COVID vaccine, for instance. Okay, and please don't start jumping in with political comments on COVID vaccine, because this has nothing to do with politics. It's about technology and law. So if you and the COVID vaccine, I believe, at least the RNA technology that made the mRNA technology that made the COVID vaccine is patented, the government can compel you to license it. So you can't say, no, I'm not going to license it. I don't want anybody using it. I want everybody to die, or I'm only going to let this company use it. The government says, well, this is for the good of the country, so we're going to force you to license it. That doesn't negate the patent. You still get paid your license fee, and you get paid the license fee at market rates. You just can't say no. So that is how I understand it, as the non-lawyer, non-legal, non-bar passing, non-law degree having, just a dad person. Okay. Next
I don't know, that's still a lot of titles to hold.
Yeah, being a dad is rough, man.
Let's go. So not much other questions in the chat. Messiah, you had another one. I'll pull up one of mine.
I see one more question in the chat. Someone asked, or asked to Reggie, how do you see, or what is your vision for Veritaseum impacting the crypto industry?
Veritaseum will push towards the formation and the lasting growth and dynamicism of peer-to-peer capital markets. So the ability for everybody to do business directly with anybody else in the world without counterparty and credit risk. That's the goal. So that five-year-old phenom in Sri Lanka, that 90-year-old commodity expert in Lagos, that kid in the projects in Chicago, suburbs of Long Island, you know, all over, East Coast, West Coast, regardless of the country, regardless of the continent, regardless of the race, creed, complexion, height, religion, anything else. Everybody gets a chance to compete, and that brings out the fittest and the survival of the fittest. Right now, you have access that is gate kept, okay? So the gatekeepers, in my opinion, a lot of them may be very capable, but they allow those who are not capable to still rise because they don't have to compete. Peer-to-peer capital markets is everybody exchange value, and then everybody gets access to the value creation machine if they so perform. That's my goal. Lofty, it's the antithesis of those who have power and not willing to compete with it. I understand that. I don't want to die over it, but I think if that existed when I was very young, and someone pointed me in that direction, I would have excelled. And if not, then I wouldn't have, but at least I would have had the opportunity. So that's what I'm looking to do. It's very different from most other people in the crypto community and traditional finance, but I'm also very different. Look at me. I look different. I sound different. I act different. I've had different experiences. So I'm definitely not the run of the mill. Reggie and Goliath. Okay.
That's a good book. That's your next venture.
Yeah, documentary coming to you as an NFT, actually.
There you go. I like that. So I know when we were talking earlier before the live stream, you mentioned a possible other risk from the other patents. Do you care to elaborate on that a little more?
Risk regarding to, in what case? Risk?
Well, just with the patent infringements. So that's why I wanted to ask for some clarity. Are you more so talking about risk to your patent or risk, risk to your IP patents, basically? We're looking at the differences between yours and others. Do they pose any risk to yours? That's what I'm asking. Or
I see what you mean. Yeah, I don't think patents pose risk to other patents. Let's take an assumption that the nChain patent does cover Bitcoin. And again, Bitcoin has very limited use. Bitcoin has lost its way. I'm sorry for the Bitcoin maximalists, but a lot of you dudes have attitudes anyway. And you'll say and act in a certain way that you would never do to my face, but that's all right though. I am not anti-Bitcoin. I'm not pro-Bitcoin. I'm just very, very realistic. I can't afford to be pro this and con that. I need to look at reality. And Bitcoin made my head explode when I first read the white paper in the Bitcoin wiki, particularly the smart contract section. It has really lost its way. But assuming that the nChain patent does cover Bitcoin and proof of work blockchains, there is some intersection, and it covers this level where our patent covers a level above it, but it covers a level above it and almost everything above that. So different trajectory. If it covers all distributed ledger technologies and not just proof of work chains, it may be more pervasive on a breadth perspective, but our IP is like that. So think of a V-shaped funnel on top of a plane. And that's if I still have to go through it or have to have somebody go through it. The total true return systems platform is actually very, very narrow and specific, but it specifically covers a space that almost every project that needs high performance data is going to need. And that's what makes it pertinent.
From my perspective, they're seem to match a lot of roll-ups and layer 2 of scaling solutions. That's where their patent more so seem niche to me on.
Right. It basically high performance data, because decentralized data, even though it sounded cool, it doesn't work at scale, at least not with the technology and implementation we have now. And that's where it hits that patent. Again, as I understand it, going through patents with a fine-tooth comb takes a lot of time and a lot of work and effort. Plus, you need people who can, rope two synapses together. So it's not easy. But I've got Messiah on board, and quite a few other people have members of the VeriDAO who are on board, have my own analytical team, tech guys, but there's but so much we can do. Amazingly, we apparently done a whole lot more than most others because, guys are not reading this stuff and they're building, literally $100 billion projects and platforms on land that belongs to somebody else. Imagine Manhattan was built on land that belonged to the Indians. Oh yeah.
Well, technically, what Central Park was. Isn't the story? It was a black area out there that was built on top of.
Yeah, right. The cemetery. That's true.
I ain't from New York. I know a little song, just a little bit.
Okay.
To your point though, just for a little perspective for viewers and everybody, I think Visa has the capacity for 200,000 transactions a second, and most of the layer twos they're promoting up to like 10,000, maybe. I know Polygon says 60,000 transactions a second, but they haven't actually reached that in production yet. So just that 10,000 compared to 200,000 transactions a second is a lot of scaling that these projects need to do.
Well, not necessarily, because that's a numbers game. You have to look at what transactions are actually needed and what's the average transaction throughput that has been used over the last 2 days, 5 months, 3 years, 10 decades, etc. So it doesn't matter if you could do 300,000 transactions per second. If you only average 11,000, then it's just a numbers game. So you have to take a look at actually what gets actually used. And that's where you have to get, if you're going to invest in this space or put your platform on this space, you have to look at the actual facts.
I was just about to say, you said invest in this space, and we were talking about assets and everything yesterday.
Yeah. And by the way, I'm almost 55 years old. So I came from the academic matriculation, rote memorization schooling of when they drilled things and that weren't quite accurate. So out of habit, I said, imagine if Manhattan was owned by the Indians. And they weren't owned by Indians because the Indians come from Central Asia, India, the Native Americans, the people who were here first. My apology goes out to both Indians and Native Americans. And that's what happens. You went to schools and the public schools in the 70s and 80s in this country. I went to private school anyway, still had the problem.
So I think there's a couple more questions in the comments. Hypothetically, or from Silber Brown, hypothetically, a company is found to infringe on your patent. They agree to work with you. How would they rectify the infringement today and continue to do business going forward? And again, hypothetically.
We work it out. Right now, while the volume is not too high for me to do very custom licenses, I sit down and I look at their position. What their cash flows are like, what the revenues are like, what they can afford, what their growth is. My goal is, particularly if you come in voluntarily, okay? My goal is to make your company greater than it was before you came to me. That's my goal, okay? Now, if you're a good company, that goal is very easy. If you're a crappy company, it might be a little harder because I can't make you a better company by giving you a license. But if you have a strong product, strong management, I'm ripe with ideas. I have a lot of IP, and my goal is to make you bigger and better. So I want 2 + 2 to equal 7. Back like in the, .com days or the 2005 real estate days or over the last couple of years.
I was about to say real estate last couple of years and just as crazy.
Yeah, my 2 + 2 = 7 would be fundamentally sound. So it's really just 5 + 2 = 7 added correctly.
I like that better.
Okay.
So I think we have one more good question in the chat. How does the recent court ruling against the SEC and jury trials impact future litigation against cryptos? I'm not too familiar with that. I don't know. Do you know what they're referring to?
I think they're referring to a district court or civil court. I forget the actual court, but they ruled that the administrative judge and system that they use, the SEC system that they use, the administrative court system, was unconstitutional. Let me explain how this works. Again, not a lawyer, my opinion, and unfortunately my experience too, but we're not going to go there. The SEC is an administrative arm of the government. under the executive branch. Okay. It has its own judges who work directly for the SEC employees, and their own courts. So if the SEC accuses you of something, let's say fraud or an unregistered securities offering, you could go through an administrative hearing, but the judge is an employee of the people suing you. That's not a good deal, right? Also, the SEC has subpoena powers, and they can ask you for anything and everything, and they will. You don't have such powers, and there's nothing you can do about it because you're in an administrative realm. I've had suggestions that were very good advice in retrospect, that if you get requests from the SEC and they start to become voluminous, which they may well do so, you may be better off just going to civil court, because there you have subpoena powers and you're supposed to be on equal footing with the plaintiff, who would be the SEC. That is not legal advice. I'm just repeating what someone has told me. And I went through a pleasant experience myself, and that experience has showed me that, I wasn't treated on an equal footing. And even if I was, the SEC has the full budget powered by the taxpayer, where I would have only my money and that of my company. Okay. You do see where you get slightly different outcomes when they have a plaintiff that has ample capital, such as Ripple. Ripple is doing an extremely good job, in my opinion. Compare that to a lot of the startups, and you can see, different level of resources and different potential outcomes. But all my opinion, right? I'm not trying to pick fights, and I'm not giving advice. I'm just giving my opinion from personal experience. Okay. And so that's what he's talking about. The administrative court judicial system within the SEC's confines. I believe that the judge said that's unconstitutional, what they've been doing. And my response is, yes, it is. But it is not as good a decision as some people would think, because it does wrap them across their knuckles, but realize that that's not civil court. Okay. And if I had to do it over again, and if I believe that I was accused of something I didn't do and I had the resources, I would bring it to civil court myself. Never being trying to be adjudicated by an employee of the entity suing you, as I understand it.
It's fair enough.
Okay.
I have one more question. Do you think with patent holders such as you and others that have large patents in the crypto space, enforcing your patents could stifle growth and innovation in the crypto industry?
Well, it depends. If you go from the speakings of the people who don't have those patents, yeah. But you have to understand, they don't have the patents. So of course, they're going to say the guys who have the patents do the damage. So let's look at some empirical evidence, and let's see if I can have you or the audience answer the question. What country in this world has the largest economy?
America or China? It's either America or China.
Okay, US or China. Okay, so then which country has the second largest economy?
America.
Either the US or China. Okay,
Right.
And which country has the third largest economy?
We said Japan earlier, right?
Japan. Okay, so 1, 2, and 3 is either US or Japan, US or China, and then Japan. So the first, second, and third largest economies are those three countries. Okay, which country has the largest technology center with the fastest growth in the world?
China. China.
It's the US. So you're hesitant. So okay. The US has it's the largest economy and has the largest financial, the technology center. Okay, Silicon Valley and all that. Second, right, in terms of technology, is probably going to be Japan, but it could be China. Okay, but South Korea is up there, but they're not quite. And China is up there. So in terms of economic growth and technological innovation and growth, US, China, Japan triumvirate reign over supreme the rest of the world. Okay. Guess who happens to have the number 1, number 2, and number 3 most stringent and thorough patent offices in the world? Take a guess.
US.
US, number 1. Japan, number 2. China. Arguably fighting with the EPO, but the EPO, the European Patent Office, covers like 22 different countries. So that doesn't really count. Japan covers 1, right? Japan, as a small island nation, has a GDP that almost matches Europe.
That's crazy.
Okay. So, and if you take US and China and Japan, that's 3 countries, it blows Europe out of the water. Okay. So if the guys who have the most stringent patent systems and give out the most patents also have the biggest economies and the fastest growing tech markets, one would think that the correlation is hard to turn you away from. You give out more patents, you have a larger economy, you have a faster growing and a larger technology market. Now, it could be an aberration if you said, well, that's just the US. And then you do Japan. Well, that's just the US and Japan. Then you go to China. Well, at some point, you got to catch the hint. Okay. So patent systems is basically giving ownership of intellectual property, just like personal and physical property and real property, to the inventor for a limited amount of time. You have a 20-year monopoly on it. Okay. It is capitalism by the Constitution, ownership of property. And that's what makes the world go round. Now you look at these countries that don't believe in ownership of property. Before China started adopting capitalism, okay, it was a socialist country. Was it ranked anywhere near the top in terms of economic might or technological development? No. Where was China in the 70s and the 80s?
They were still in the old days. They were just starting to change up.
Right. Japan was flying throughout the mid to late 80s or early 90s because they adopted a strong technology patenting system. Okay. And there you go. So the guys who say that patents stifle innovation are the guys who don't have patents. You know, and if you want to argue with me, before you argue with me, go argue with the facts. And after you tussle with the facts, then come and I'll take the rest of that discussion. Okay. Okay. Next one. Or is that it?
I think that was, so we don't have any more questions in the chat. And I don't have any more. Messiah, do you have any more?
Last of mine.
So I think we're fresh out of questions, Reggie.
Okay, you say that's it, Messiah? Do you have more?
Yeah, no, that was it.
Okay. Well, that was a decent run of about an hour and 10 minutes. And I think this is very educational. But I'm also biased. I'm like those guys who don't have patents, right? I'm looking at it from my perspective and my perspective only. But like I said,
for the community, I think it's, for the crypto community, it's still good to know, especially when we have so many people, as you say, using and building on this technology. You need to know what you're building on, so it's definitely important information to, even if you don't agree on, to at least do your own research and figure out what's what.
Yeah. It's very important. I mean, that's the whole point of investing. You're an investor no matter what. Let's forget what the SEC says and whatever. If you're going to put a lot of your time into building a project, you're investing your time. Okay. You purchase a product, you're investing in that product. Maybe not for financial capital gains, but you're investing in it to use it and hopefully turning your resources, your work product, into a greater product. So you're investing no matter what you do, if you expect to get something out of your efforts or your capital or your time. It's just that simple. So you have to know what you're investing in. That's
big facts. It's more than just about money.
Yeah. There's a Zoom user who popped up in the waiting room. You want to take him or you want to end this?
They don't have a name or anything on here. Did you only put the link in the Telegram?
Yeah, I didn't put it in Telegram. So I put it on Twitter, and then all types of yahoos jump in.
That's what I was about to say. We'll see. Zoom,
you could try him. If he does something silly, just shut him down.
Yeah.
Okay, looks like he's on slow bandwidth, so. Okay, well, we tried.
Yeah, no problem. Yeah, no, they're not trying to stop their video, so I removed them.
Okay. So on that note, everybody, follow me on @Reggie Middleton on Twitter, @Veritaseum Inc. on Twitter as well for the Veritaseum properties. You can join the Telegram group. That's Veritaseum Official on Telegram. And hit like on the YouTube channel, subscribe, put that little bell for notifications. We're going to try and do this weekly. We do very deep dives. And follow everybody else on the screen. Also, next week, we're going to go through our social firma and social contagion model, our social geopolitical macroeconomic contagion model.
It's a mouthful. It's okay.
Yeah, and basically, it one of my many calls was the call of the European sovereign debt crisis of 2010, which was nice and early, and it was right on point. And I called all those bonds collapsing, countries collapsing, etc. We are right back where we were before, much worse. This model takes claims from one country that are had to another country and tracks them, and it creates like a daisy chain, like dominoes. And then it shows how much weight is on each domino based on GDP, price of oil, reliance on oil, social ferment, banking, non-performing assets in the banking center, et cetera. Very advanced model. It takes about a year's worth of manpower to populate this model. Okay. And I do it in less than a year by having several men and women. I shouldn't say manpower because I have women working on it too. People power. I have several people working on it simultaneously, and it's still taking us over 4 months with a whole team on it. But it's going to be very revealing. And again, it's about doing your homework. I'm a macro investor and a fundamental investor. This has a lot to do with crypto, an awful lot. I'm going to tie it right in next week, if I have the time, that is. Okay, so roughly next week. Okay. So, au revoir, Zaijian, peace, sayonara, das Vidania, and all that other stuff. Okay.
Cheers.
Bye, everyone.
I think you're going to have to end it on your side, Reggie.
Okay. Will do.